Hi, everyone. Thank you for joining. I think we are going to make a start. Thank you very much for joining. This is the latest briefing from Deal Room. My name is Aura Brown. I'm head of insights here. And for those of you who don't know, Deal Room maps the world's tech ecosystems with a source of record on startups, venture capital, innovation, tech ecosystems globally. Today, we're going to be presenting some findings on all the stuff that happened in 2025 in tech and venture capital and the slightly surreal landscape that we're operating in right now and what that might mean for 2026 as well. But first, I'll let Lorenzo, my colleague, introduce himself as well, who'll be joining.
Hi, nice to meet you all. I'm the head of research at Deal Room. So typically I'm the one that presents the insights, but this time we switch with Orla. So I will be questioning her, but also looking at the chat. So please, drop any question that you might have so we can discuss later.
Yes, let us know if you have any questions as we're going along. We'll try and answer them either in real time or at the end. And yeah, let us know where you're dialing in from as well, because that's always nice to see. But yeah, without further ado, I will get started. Let me just share my screen. Welcome, Chris from London. I'm also in London. Right, one sec. Slideshow. Okay, here we go. Yeah, so we wanted to recap. As I said, it's been quite a surreal time. So first of all, this is a little bit of what we're going to be running through. So there's a lot of charts here, but the key is there's lots of things that are going up and to the right. So we're going to go over venture capital, what was happening in VC last year, number of new unicorns and decacorns, also M&A activity and value creation. So let's go into a few of them. And this is the kind of landscape of everything that we're looking at. So we track startups from before they even become a company, all the way through their life cycle to exit, IPO, beyond. And we estimate that there are about 59,000 venture scale startups founded each year or in 2025. And yeah, it's cool that we're able to then track them through their life cycle, see at what rate that they are, are they progressing really quickly through the stages? How does that compare to previous cohorts? And yeah, in 2025, there were also 21,000 companies that raised their first VC round. So clearly, alongside the headlines of big tech and big AI companies, there's lots of pipeline of early stage companies coming as well. But on the value creation and fundamental side, first of all, so global tech enterprise value is now worth a combined $55 trillion. So this is up 29% on the previous year. Now, a lot of that was in the public market, but also 18 trillion of private companies that are VC backed, so companies like Stripe or OpenAI, SpaceX. Some of these we might see exiting this year, but still a huge amount of value in the public market and a massive amount of growth. And if we look back just on the decades, like from 4 trillion to 55, this is why we also work with a lot of governments as well as investors, because these are the growth engines of our economies, our startups that are creating value and creating jobs. And yeah, what we're also seeing is that this value creation is accelerating. So the youngest cohorts of startups are reaching the same level of value created as the older peers, but much quicker. So that a purple line there, companies founded between 2020 and 2025, they've reached the combined value of 3 trillion faster than any cohort before. So this is already something that is fast growing and that seems to be accelerating. Which is pretty crazy. And yeah, one of the things that we wanted to also show is about whether valuations seem reasonable at the moment. So we see lots of high valuations, but is that bubble, as we put in the title of this session, is there an AI bubble, or is it based on fundamentals? And so this shows the median entry multiples of VC rounds, so the multiple of the revenue that the company is generating. And if we look at 2025, it's actually pretty reasonably flat. If we look at a lot of these companies, especially if we're looking at rest of the world and Europe, we're not seeing the same levels as we saw in 2021, which was a notable spike, and everybody kind of knew that things went a little bit out of control that year. We're not seeing the same thing because these companies are, although they're being valued really highly, they're also generating a huge amount of revenue just much earlier in their life cycle.
Yeah, and on this, I was checking on the public multiples that we also have in our platform, and the average for listed companies around tech goes from 2 to 2.53, depending on sector. So of course there's still a gap from the entry multiples in the private and the public one, but of course this company grow revenue pretty fast. So 10, 15, even 20 is not a crazy multiple, honestly. Yeah. So it can totally live up.
Of course, these are looking at the median, so there's some outliers on both ends as well. But yeah, pretty. So there's some discipline in the market, let's say, in the valuations. And yeah, we're also seeing that if we look at the number of new unicorns, so billion-dollar companies and exits that we count here, there was this massive spike in 2021, and then everything quietened down. Things are growing again, so there are more new unicorns in 2025 than in 24, and yeah, in North America and Europe in particular. But again, we're not seeing that kind of really crazy outlier spike that we saw in 2021. Again, signaling some discipline maybe. And where we see those unicorns, so yeah, unsurprisingly, maybe US is number one. They would be off the chart if we had the bar chart to its full extent, but 132 new unicorns. This is actually 2025 and January this year. This is counting. And yeah, some familiar names in there, but also some maybe notable entries at the top here. So I would say Sweden and Switzerland in particular, maybe, but also yeah, a few others. UAE, Saudi Arabia, we wouldn't expect to see those near the top, I'd say, right, Lorenzo?
Yeah, I think for me the surprise is really, seeing Middle East ramping up so much, and on the other side, a bit of Asia and South America that a few years back they were up there, and now they scale back. Like India, it's surprisingly low compared to a few years ago, for instance, and things like that. So there's been a bit of a shift in the emerging market.
Yeah, from your perspective, you probably wouldn't expect Italy to be on par with India, potentially there. So they're doing pretty good as well. Yeah, and what we also wanted to look at was not just these billion-dollar companies that are sort of really, there's an argument sometimes made about them that they're hyped and that valuation isn't real. Well, we wanted to look at the companies with based on their fundamentals as well. So what we call thoroughbreds. So these are companies that are generating at least $100 million in revenue. So yeah, these are yeah, proper businesses with proper fundamentals, and we see plenty of them being created in 2025 as well. Again, the US is at the top, but France, interestingly, ahead of the UK there, and Canada up there too. And yeah, we looked at the unicorns. Now this is the decacorns, so $10 billion companies, and we do see a bigger spike here. So we are definitely back to almost 2021 levels in 2025 for the US. So certainly AI driving this boom. But yeah, any thoughts around this one, Lorenzo? I'm kind of curious.
Yeah, to me, it's particularly interesting to compare the shape of this to the slide before on unicorn, like, because unicorns are still 3 times less or something like that than 2021, while decacorns are more or less on par across all regions. So that's a particular thing to see, let's say, because we are seeing less companies get to that 1 billion, but like a similar amount crossing 10 billion. So maybe, yeah, how do you interpret this, Orla?
Well, yeah, and a lot of these are still private as well. So there's also the question of whether they will be able to realize it when they're going public. And, you know, there's a kind of bit of a software sell-off at the moment. I saw there was that Visma potentially delaying their IPO in London because they're a little worried about what's going on. So, yeah, but it really also tells a bit of a story of concentration, which is a theme that we'll see through the deck of, like, there's just massive concentration happening in a small number of companies, in a small number of places, much more than ever before. So it's like it's in AI, and it's in the Bay Area, and it's in a few big names. But yeah, that theme will kind of come back a little bit, I think. And speaking of, investment, so after years of correction, after that big spike in 2021, VC is certainly growing again. So up 27% in 2025 on the previous year. There was actually a little bit of growth in 24 as well. I think that was in the US. A lot of places actually didn't even see growth then. This is the kind of the first year that it's really back. So there was sort of maybe tentative optimism last year that things would return, and that's definitely what we're seeing. We've split it out here by the different stages for where that capital was being raised, and you can see that the biggest spike, we'll see it in a second, we'll zoom into it a little bit more, but is in that scale-up stage of the late stage rounds, and that concentration piece that I was mentioning as well. And yes, here it is split out by the different rounds, and we can see that like far right dark purple bit is the bit that really went up in 2025. So rounds of $1 billion plus peaking in 2025. Any thoughts on this one, Lorenzo?
Well, yeah, I think also Chris was commenting in the chat. Yeah, definitely the money are piling up in a small group of companies that are raising. You know, we used not to have a bucket for 1 billion, 2 billion plus until, some time ago, because they were very rare, and now there's a lot of them happening. So yeah, for sure, it's VC and, the ecosystem seem to think we are in a super cycle, and that there will be some very, very, very big, like, hundreds of billions, maybe trillion company coming out, and they are piling up, investing very large amount into these companies to win the market first. And there's still, activity at early stages, but a bit less than, in the 2021 and so on era. So yeah, this is definitely what we see, a concentration on some, big players.
Yeah, definitely. We literally used to only have like the biggest bucket was 100 million plus, or then like 250 million plus, and now we've got billions. So I did a post the other day because I saw a Reuters article that was talking about the potentially $100 billion round being raised by OpenAI, and it was describing it in the dozens of billions. And we used to talk about big rounds as being hundreds of millions, and now we're talking about dozens of billions. It's wild. But yeah, I think it is useful also to show that like these are dominating the overall figures and the headlines, but there's basically just as much activity going on at the earlier stages as well. So there's like still just as many great companies being started and getting funded. They're just not getting the press coverage, maybe because it's hard to resist when you've got rounds like those other ones. And yeah, on those big rounds, so we've done an even bigger bucket of $2 billion plus here. So there were 18 rounds of $2 billion or more in 2025, and that's by far the most of any given year. And yeah, some of those significantly over 40 billion for OpenAI, and there were some $10 billion, $20 billion rounds as well. A lot of those were for the US AI companies, basically. But there were some others as well. I think Revolut in London raised 2 billion as well.
I don't know, Mistral, it's at the edge in conversion, I think 1.7 billion euro, but we are in that ballpark here also. Yeah,
sure. And yeah, this is what some of that concentration looks like as well. So we, the different colors here for the different regions, but yeah, in North America is light blue, and dark blue is just the Bay Area. So you can see the huge concentration of companies just coming from there.
Yeah, Soren is asking, if these big rounds, we see them as an AI bubble. I think it's a bit what we were saying before, it might be in some bits of it a bubble, but we also seeing revenues really ramping up fast, like it used to be that getting to 100 million or 1 billion revenue in 7, 10 years was like a great outcome. And now there are some companies getting to this, in 1-2 years. So that's like an unprecedented speed to get to this like, also revenue targets. But yeah, anything to add on this?
Yeah, agreed. So I think, there's will there be a bit of a reckoning and a shakeout? Almost certainly, when there's this much going on, but that's kind of what always happens in tech and in VC anyway. It's just that these bets are bigger than we've ever seen before. And yeah, as we showed, there is the kind of the fundamentals of the revenue underneath, and the growth at the same time. So it's new categories being created. And
I was looking at now at Anthropic profile on Dirum, and I see in 2025 they reached around 7 billion revenue. So it's not like peanuts. And also they were at 1 billion the year before. So like 600% growth at that scale. And they say that they target 20 billion in 2026. So like, maybe it seems like a crazy valuation, but if they grow to 20 billion next year, then it's totally normal to be valued more than 100 billion. So it's really the speed at which this revenue are growing, that is showing that there's something behind. It can change. Someone will win, someone will crash, but someone will win. I think we are pretty sure about that.
Yeah, we should probably put a little not investment advice disclaimer if we're saying things aren't a bubble, but yeah, we do see the fundamentals backing it up. And yeah, so on what that concentration looks like in another view as well. So here we've got the VC, all VC raised last year split out by those different stages, and the dark blue again is the Bay Area. So the just in the scale-up capital, 46% of all scale-up capital was raised in just the Bay Area. So it's absolutely dominating. When we do look at those earlier stages of scale-up capital, in the areas of red there, then there's actually a large proportion that's still being raised in Europe and China, India, rest of Asia. But as those companies scale, it's just really dominated by the US and by the Bay Area.
Yeah, it's interesting to see that Bay Area kind of eats up not just the rest of the world, but US itself, like that. When we look at early stage, there's a lot in the rest of the US, but like later on, it's really Bay Area that captures a bit everything. Yeah.
Yeah, and maybe this is like it sounds like not news, because people know that's the Silicon Valley is the home of startups and VC, but it's actually even more so now. So like the AI wave has meant that although the rest of the world had been sort of increasing its share of VC, it's kind of gone into reverse because of these big companies that are based in the Bay Area.
Yeah, and I think especially around COVID, the pandemic, there was a lot of talk, like it's the end of the Bay Area time, now everything will be spread. And we actually seen this reverse in the last 1-2 years, with, being there, becoming increasingly important.
Yeah, I should maybe explain a little bit on the red, dark red bit here as well, actually, because we call this, we've got New Palo Alto in there, which might not be familiar, but it's what we call this supercluster around London. So we kind of think about the fact that the Bay Area is one hub, even though it's actually a large area and it can take you about 4 hours to get from one end of the valley to the other sometimes. So we looked at Europe and decided, well, if we were to consider one supercluster in the same way as the Bay Area, what would that look like? And if you draw sort of 4 hours by train from London, that includes places like Paris and Amsterdam, Oxford, Cambridge, of course, the north of England, you might just get Edinburgh. And when we do that kind of comparison, we actually see that at startup stage, these new Palo Alto startups are raising more capital than companies in the Bay Area, which is pretty impressive. Dublin, I'm afraid you've got to get on a flight to get there, so there's no tunnel or bridge yet, so they're not included. They'd be in the rest of Europe bucket. I just saw a comment there. But obviously an amazing tech hub as well. So yeah, I think it's interesting to compare these two, because you can see that there's in New Palo Alto and in the Bay Area, there's great companies that are being created that are backable and getting that capital. But then when we look at the slice size in the last bucket, then that is radically different when you get to scale. And actually, you see that exactly here as well. So this is when we look at the startup capital, New Palo Alto is above any other hub. So 5.3 billion raised last year in rounds under 15 million, and 4 billion in the Bay Area. But then when we get to that breakout, and then in particular the scale-up capital sections, then the Bay Area just monopolizing, just taking all the oxygen out of VC and not letting anyone else have any. And then on to sectors and themes. Well, we maybe touched on some of them, but yeah, we had a look at which were some of the hottest sectors last year. So we've mentioned AI, of course, that's coming out on top, and lots of different bits of it as well, whether it's agents or model layers or applications, compute infrastructure. But a few other interesting bits in here as well: defense, quantum. Yeah, Lorenzo, you often work on a lot of research around our deep tech and things like that. So yeah, interested in your thoughts there.
Yeah, no, definitely. You know, like for sure, AI, defense, robotics, quantum, all topics we have seen a lot of momentum in different ways, from funding, exits. You know, new companies started, so I'm not surprised them to see them. You know, among the top in our scoring according to the data. Yeah, definitely, you know, beyond really AI, that there's a lot happening in this sector that we also define as the one, you know, key for, let's say, security, resilience, and this kind of, you know, technological sovereignty race that is going on among countries and regions.
And we have a report on that coming out next week as well, right?
Yeah, on Monday, I think, we'll the next edition of the report with the Net Innovation Fund. So we are looking at this specifically in Europe, but it's a very interesting read.
Nice. So we can, yeah, people can look out for that. And yeah, so this is what the split looks like when we look at just AI versus everything else. It's now almost 50% of global VC is being raised by AI startups, and we're quite particular about how we assign this kind of tag on a company, right? Well, it's not just kind of any company that has AI on their website. But yeah, do you want to explain that a little bit, Lorenzo?
Yeah, no, of course, there are always, you know, gray lines, but we try to assign this to companies, you know, where AI sits at the core of their business. So, of course, you know, the one that build AI models or build chips for AI, you know, computing, or they build ML ops software, you know, tools for AI, things like this. And then the application side, and in the application side, of course, pretty much every company uses AI in some way. So we try to split between the ones that, you know, are either AI native, you know, especially newer ones, or the one that pivoted very strongly across towards AI, and instead we don't assign this to all the rest. So in some sectors, you know, pretty much, of course, everyone uses AI, but are you really AI first? That's a different logic.
Nice. I just saw a question that came in, which was, what would this chart look like just for early stage? We can maybe show that on the app, or how we would do that, look at that on the app afterwards. I don't think we've got it in the deck, but we'll try and answer your question while we're here. But if we do look at that split out by geography, I think this is, again, one of those points of concentration, because it might look like so half of all VC going to AI, but actually in different geographies, it's a really different picture. So in the US now, nearly 60% of all VC is going to AI startups, but in Europe, it's a third, and they're kind of best of the rest. So the US has moved faster and further, quicker, deeper into this AI focus compared to the rest of the world. And yeah, I mean, there's good reasons for that as well. Like there's some other areas where, you know, in Europe is really strong in, you know, quantum that you just mentioned, or fintech as well. It's not that, you know, AI good, everything else bad, but it's still interesting to see these dynamics. And yeah, we mentioned defense tech as well. And yeah, that defense resilience report coming out on Monday, but this also shows how it's become so much more central as a topic in tech and in venture capital. So this is hockey sticking even more than AI. Now the percentages are still fairly small, 2.5%, but that's how much global VC is going to defense tech now. And it's
maybe to clarify, defense here is really only defense. So it doesn't include space or quantum or those topics that are defense adjacent or in what we call defense security resilience. When we look at those, then we are above 10%. So that's like, then it gets to double digit, let's say.
Yeah, but this is a topic that really was, as you can see in the chart, barely touched by VCs in just a few years ago. Yeah, attitudes and appetite has completely changed in just the last few years. And yeah, interesting that, not that it's kind of correlated at all, but there's sort of harmony between that 2.5% and the sort of NATO targets of 2.5–3% of GDP spending on defense as well. And yeah, a few other areas where there's been a lot of growth: cybersecurity, space, drones, launch vehicles. Do you want to talk us through some of these, Lorenzo? Oh, you're on mute.
Yeah, of course. Yeah, definitely. I think cybersecurity consider a bit, adjacent, because it's mostly, SaaS, and then driven a lot also by the commercial market, even if it's relevant for defense and resilience. But of course, we have seen a lot of activity, especially around quantum in Europe, very strong momentum, also in the US, by the way, quite a strong startup scene in Europe, important exit like Cosfordionics, strong fundraising like EQM. In space, of course, there's activity both in Europe, US, and China. A lot around launch vehicles, kind of, building sometimes a competitor, the alternative to SpaceX, satellites, with all of the different regions trying to race to build these massive constellations. So a lot of funding going in all of those areas, plus the emerging sectors like in space manufacturing, things like that are actually now getting serious traction. And then of course, yeah, drones and similar have also gotten quite some revenues in certain region, and conversely valuation and so on.
Mm-hmm.
Yeah, Michael, in quantum, we have all the kind of segments. So we have, in general, quantum computing. We have then the quantum computing hardware, quantum computing software, quantum cryptography, quantum sensing. So in some infographic, you will see a lot of this.
Yeah, we can show that in the app after as well, actually, because we've got a nice deep text on quantum. And yeah, we want to touch on climate tech as well, because this is a topic that I think people in the space have felt a bit down about, the narrative-wise, that it felt like it had gone out of vogue. But we had to look a little deeper into what's been happening in climate tech VC, and actually, although it's been kind of overall has gone down in the last couple of years, a lot of that has come out of more consumer-focused products and software products. And when we look at climate tech, that is also deep tech, it's actually been a lot more resilient, which makes a little bit of sense maybe, because these are kind of longer term bets anyway. They're not so market or trend dependent. But yeah, maybe you have something to add here, Lorenzo.
Yeah, no, completely agree. The vision, I think, just to clarify, what's then it's in there. There's nuclear, there's geothermal, there are, new generation of batteries, different chemistry, things like that. There's been a lot of attention going into mining, both AI, discovery of the deposits, and also mining techniques. There's, AI material discovery. There's some of the carbon, removal, utilization space. All these things is what we call the deep tech side of climate tech. And in there, there's still, notable activity. Let's say there's been a bit of a chilling in some other area of climate tech, especially around the food space, but also a bit on general marketplaces and SaaS. In other sectors, circular economy have been struggling a bit more. This depends a bit, from region to region, and I think there's also a bit of a general suffering in some areas that have been maturing, and that's just normal. So if we think about lithium-ion batteries, but also electric vehicle, now the market has kind of crossed the mass adoption, and so it's normal that we don't see many new entrants or fundraising sometimes in some of these fields, and it's not per se bad. There are just topics changing time in venture capital.
Nice, thank you. And yeah, I think we also did this breakout of energy of climate tech investment by region and also by stage, because it's also interesting to see these different themes emerge in different geographies. And in China, there's been a big focus on electrification hardware, whereas in the US, there's a lot of nuclear activity. And in Europe, grid and services take a lot more of the focus of the investment. So there's different flavors of climate tech in different places. And yeah, another interesting little shift that we've seen in the last couple of years is that in China, a large proportion of their VC that's been raised has been going to manufacturing physical products. So that's quite a large area. It can include drugs or semiconductors or robotics. So there's lots of different things in there, but clearly a big focus and growing focus on manufacturing real things versus kind of e-commerce or SaaS kind of startups, and much more so than the rest of the world. And yeah, but if we look at it on a global level, when we split out those three things that I mentioned of e-commerce and marketplaces, manufacturing and SaaS, e-commerce marketplaces has really been the bit that's got squeezed in the last few years, particularly post-COVID and post-2021, with a lot more focus on SaaS. And yeah, but inside there again, there's these different dynamics in different geographies where China has really doubled that share for the manufacturing.
Yeah, and probably some of this SaaS is kind of becoming the new marketplace. Like, I don't know, ChatGPT or these LLMs are kind of becoming the next interface for marketplaces sometimes. So yeah, we maybe the picture is a bit blurred. Yeah.
Yes, very true. And yeah, maybe a little look at exits and outlook. So what was positive last year was there was definitely some landmark exits that managed to return some funds to some capital to the funds and to investors and founders and employees. So here's just a few of them. So there was some strategic kind of testing of the IPO market with some success, but also some really big acquisitions as well, and across a lot of different sectors. And yeah, this is what the M&A market looked like, again, in that kind of geographic split. So there's actually a lot of healthy activity happening around the world, not just kind of in North America, although 360 billion worth in North America, 61 in Europe and 19 in Asia. That happened last year. And yeah, if we have a look at the combined value, so with much more value that was created in the M&A market last year compared to previous years. So some of those were really big, like Wiz and Scale and Grok. But yeah, positive signs for the exit market, with some caveats that I'm going to come to in a sec. But yeah, well, there's also some, yeah, go on, Marisa.
Maybe also like, I think we have it in the slide, but they're getting a bit creative with types of acquisition, I guess. So maybe some of these have been, I think Grok itself it's a semi acquisition. It's like a strange licensing acquisition deal. Scale, it's an acquire most, and we have seen big tech going up a lot around and doing this kind of deals that are not exactly acquisitions, so they can be really fast in moving around.
Yes, we have included them here because it's sort of creative deal making, where it's kind of avoiding antitrust scrutiny, basically, for some of them, but we have included the value here. So I'll comment that Wiz is Israeli, so we do have them as Israeli and US, I believe, in the platform.
Yeah,
I think.
yeah, we have them. We both have HQ and founding location, so depending on the visualization, the inside, they can be considered as both. Of course, they are a success. At the moment, the HQ is in New York, so in that infographic, they went in the North American bucket.
Yeah, this is showing HQ on this one, but we do count them as an Israeli unicorn as well. Yeah, and we also saw some recovery of IPOs as well, albeit not getting to the heights of 2020 and 2021. But yeah, some important testing of the IPO window, which, yeah, and people will be kind of watching how the next few go. There's definitely going to be some coming up this year as well. However, we've also got the biggest ever pipeline of private value in the market at the moment that's waiting to go to exit at some point. There's 7 trillion in value that is still private and venture backed, and this is just looking at unicorns and those thoroughbreds, so $100 billion valuation or 100 million revenue plus companies. So when all of this can manage to go public or be acquired, and how much appetite or capacity there is in the market to absorb this as well is maybe a question that's still to be answered.
Yeah, I was comparing this with the statistics in the slide before. So like around looking at both IPO and M&A, we have a bit less than 400 billion this year, and we have 7 trillion to go out. So that's, you know, between 15 and 20 years of time if you go at this pace, and not considering that this company will keep to grow. And we said at the beginning 3 trillion of value added this year. So you know, if you have 400 billion of exit and 3 trillion added each year, you know, it's still not matching these numbers. And of course, we know that SpaceX wants to go public at 1.5 trillion. Anthropic is planning at 500 billion. So, you know, that would bring the kind of exit value in certain years to the trillions. But yeah, we need to say, you know, what's the kind of future for this company? Are we gonna see, you know, many years of like trillions in value of exits, or are this gonna be stay private forever or whatever? Yeah.
Yeah, the napkin math is looking a little crazy at the moment. But yeah, as in kind of conclusion of some of these things that we were looking at, you know, we could say that AI is not necessarily the bubble that people have are positioning it as. That there are fundamentals that are underneath a lot of these valuations, and there will be corrections and shakeouts, but there are also novel breakthroughs happening and companies that are scaling to this level of revenue faster than we've ever seen before. We're also seeing this massive capital concentration at the top in these really big rounds, and a small number of companies that are spending it on scale and compute, and it's also in a small number of geographies that as a byproduct as well. We also see that big tech is building vertically, so chips, energy, data centers, supply chains, all becoming part of all of the big tech companies that are having to focus on these things now, so that they can own their full stack of in the AI age. We're also saying that Europe is rearming both digitally and backing sovereign AI and also industrial depth, but lots of the rest of the world is as well. So yeah, whether it's, you know, literally on defense tech, or whether it's about having your own sovereign AI models, these are all really important themes at the moment. China's doubling down on hard tech and manufacturing, and maybe we can talk a little bit about the kind of software sell-off that you know, people are talking about now as well, because there's sort of some arguments being made that now that software is much easier to build, will it all become a lot like is it removing the moat of some of these software companies? Is there more opportunity and safety in hard tech and manufacturing, because you can't kind of generate that with AI, I suppose. So it's an interesting move from them. And then exit pressures. So M&A and IPO pipelines looking strong in terms of the signs from last year, but it is selective, and there's still a massive pipeline of companies that are looking to exit. So yeah, that's a few of the themes. We also want to show you where all of this data comes from as well, and answer some of the questions that came up in the chat as well, because all of these charts you can basically make in Dealroom, and you can filter them in whatever ways you want. These are literally like screenshots, lots of these from the app. So at this point, I'm going to hand over to Lorenzo, who's going to show us around a few of the features.
Yeah, sure. So maybe we can go live in the app. So someone was asking about, for instance, AI at the early stage. So, well, we need to align on what we call early stage, because, okay, should we consider this 2 billion seed or not? So depending on that, the answer can change a lot. So I see like nominally seed rounds in 2025 is like 12.9 billion for AI. When I exclude the AI, it's, it's 16.5. So, it's a bit less than alpha, still quite a lot. If you look at the number of companies and so on, the picture can change a bit, but it's more or less around 40-50%, depending on many metrics that's going around the AI. And you can play with this, by round sizes, we also have something called standardized round type, depending on what exactly you want to look at, we can look at this, every way we want. But yeah, broadly, it's not only a late stage thing. A late stage is more concentrated, but there's also a lot going on at early stage. And then someone was asking about quantum. So, you can type quantum in the chat, and you will get suggested. You will get suggested, different things like some tags that exist, and also, for instance, a landscape that maps this. And this is how we typically think around quantum, and it also shows you a bit the taxonomy. All of these landscapes in the room are interactive, so you can see the companies inside each of them. You can see, fundraising trends for each of these buckets. So all of that, it's an interactive tool. So we see, of course, a lot of quantum hardware, fundraising at record level in 2025. And we have, all these kind of tags on each company that help you, know exactly what kind of segment of quantum you are looking at. But maybe we can show a bit where many of these visual also came from, and keep dropping questions so that we can, get to them.
Yeah, there's one about pre-revenue deep tech.
Well, a lot of deep tech is pre-revenue. So anything in particular that you were wondering about?
Maybe we can just like show how to okay, concentration in the UK, says Daniel.
Yes. So yeah, there's a few ways one can look at that. Maybe we can try the let me see the funnel tab, for instance, just to use a new function that we have. So okay, if I go in here, maybe I'm interested in let's say UK by cities, and I can have an idea of what kind of concentration we have, for instance. So I can sort this by different parameters. Let me do, I don't know, early stage startups. And I see, London is definitely, in a league of its own. Typically, depending on the submetric that you look at, sometimes we say the golden triangle of London, Cambridge, Oxford, typically attracts around 75-80% of the total funding in the UK. So that's more or less the level of concentration. You can play around with different of these metrics and find the sat inside that you want.
Maybe should we also have a look at the unicorns tab, because that's where all of our charts came from today, and that's kind of quite nice to show all the bubbles.
Yeah, exactly. So there's this tab called Unicorn under certain insights, and we can do a lot of things in there. We can see, Unicorn, Thoroughbreds. We can see a lot of statistics about this kind of companies. So maybe, I don't know, we go around unicorns and we start to see, okay, who these companies are, what kind of growth are they having, how many are VC-backed, bootstrapped, exited or not. We can see different region. We can play with timelines and so on. We can see, how this has evolved in time. So if we look back, 2016 to 2018, for instance, there was a lot coming from Asia, and now we see, the motion back to US and so on. We can see the sectors, and there's a lot of. We also have some visualization on the revenue growth of these unicorns in time. What's the top quartile revenue growth and so on. So the top of these companies are growing at around 100% a year, and they're already, probably at very high revenues. And then there's some infographic that we can also, look around.
Yeah, we had so Oren earlier mentioned that Wiz was an Israeli company. We do also in here, it shows that Israel has produced more unicorn founders than anywhere else in the world per capita. So yeah, and by quite a distance as well.
Yeah, exactly. So yeah, I think in here we will see, okay, if I look at companies and founder, I think if I look at tweets, we'll show, the double flag. Yeah, see, also we show that the founder origin is fully, from Israel, and that this company is US and Israeli. And we also show, kind of the revenue growth, employee and revenue per employee and these kind of things. So all of these insights you can play around, see different of these companies, how they're growing, what kind of scale they reached, and similar things.
We had another question as well, which was about, actually there's one on spin-out. So is there a way to find spin-outs that have just spun out of unis?
Yeah, sure. So in general, there are two ways. One, if you are interested in a single uni, then you can just go on that uni profile. But otherwise, talking in general, if you type spin out, there's either a tag or around, it doesn't really matter. I will use the tag. Then, you can sort by launch date, and you will find a lot that, spun out just right now. Many of these are in semi-stealth or similar. And this data come from both like a lot of interaction that we have with universities, but also we kind of review companies that, founded by a professor or a PhD. We say, where they're working at the university, we study a bit this history, and then we can assign it sometimes without the university, and then we verify in time.
Nice. Maybe we can also share the deal multiple section, because that's also where we were showing that that multiples were sort of still flat. This is kind of where you can find all the data in real time, and you can also filter it to just look at certain segments or certain geographies. If we look at
basically in here we have both like VC round multiples and exit multiples, and you can filter by a lot of parameter, any company attribute, but also like if you want only a certain round type, if you want only very big rounds or things like that. And you can also see the evolution in time. So this is without any filtering, I can say, okay, that what we were showing before, that the multiples were really high in 2021, and still 2022, well, there was the correction, and so now it doesn't look that crazy. Let me try to change this and actually, add AI. Okay, so we see it's slightly higher and a slightly different trend, but it's not crazily, higher. The kind of multiples that we see is like 33 ads for the top quartile, while what we were seeing before is like 23. So a bit higher, but not crazy. But maybe what can be interesting, is to look at the specific, deals and say, exactly what the kind of spread, and what's happening there and so on. So we can also sort by some of these parameters and then look at, okay, what was the kind of multiple for the very big rounds and things like that. So if I look at, OpenAI fundraising, in time. There's been some of them at 25x, but like It's AI, for instance, raised at 230x. That's quite a lot. So, you know, there's a lot of spread in there. And something that is also particularly interesting is like if we take a company, we can also see, clicking on that, all the details about that deal. So we can see how that compares with similar deals. So we see that, you know, that there's been a few AI deals with 100 plus X multiple, where this deal in about Replit was more or less on the median that we were discussing before, and the 5. So it's, you know, it looks like a sensible kind of deal. This 9 billion valuation, we see that, you know, they reached 240 million revenues, you know, so that's, you know, something quite sizable, and they were pretty much on nothing before. Yeah, so you can explore, you know, get an idea of, you know, for your decision making when you think about deals and stuff like that.
We've got a few more questions in the chat. So one from Oren is there a way to create a target list of companies likely to raise in the next 6 months in specific geographies and sectors and stages? Yes, there definitely is.
Yeah, we also have yeah, we also have a parameter. So let me maybe play around with a couple of filters. Okay, yeah, whatever, yeah. And then we decide, okay, we are interested in companies decently early, and that maybe, you know, they haven't raised any seed, Series A or something. Maybe you're interested in the ones that raised a seed or whatever. But yeah, if I take any of these, let's see, don't know this company specifically, but in the signal that we have these 4 metrics, and one of them, for instance, is timing. So yeah, looking at this company, it just raised the seed round. So, you know, it might always be worth getting in touch with them, but maybe they will need a few more months before starting to raise their Series A. So the timing is still low. And then in the next few months, it will increase. So, you know, you can look at the timing of these companies. You can mix parameter like, you know, when they raised their last round, you know, what was their previous round, and you can get, you know, a query on that, and you can sort this by, you know, the kind of Ethereum signal or growth that they're having. So the logic is, you know, if they raised 1 year ago, 1 2 years ago, at least, or they are growing fast and everything, very likely that they're gonna, you know, get fundraising at the moment, or they will be fundraising.
Yeah, you can get very specific on the filters into small niches of sectors. You can just filter for companies that have a serial founder, for example, or yeah, in one geography, or with a PhD founder, and then you can save this list to get alerts anytime there's a new match to this criteria. So you'll see notifications in the app, but you can also sign up to get an email so that anytime there are new matches to your criteria, you can take a look at it.
Yeah, you can get, you know, super specific on whatever you want.
Yeah. There was another question which was about fund performance. So are there ways to benchmark other funds' performance metrics like IRR, TVPI?
Yeah, we don't use those performances for a couple of reasons. One is that typically they're not available, and all the data sets out there are very, very cherry picked, and they cover like less than 5% of the market, which essentially means it's, you know, worthless in our view. So we look at this, and also they are very backward looking, you know, in most cases. So we look at a slightly different way. We look at this methodology where we see the investors, and, you know, we look at which kind of outlier outcomes they backed and how early they were inside there, you know. So if a company like invested in a unicorn or in a 100 million plus company at seed, it's very likely they had a great return. So I don't know, looking at the EMEA one, for instance, Index Venture, I think this year they got like an insane amount of money back from a few exits. So, you know, and seeing them as, you know, second in the ranking there, you know, it means that this is quite correlated with return. Also burdened on capital, you know, winning from Revolut and a few others, you know. So the names there, you know, it's very likely that they are having very good returns. So we look at, kind of what's in their portfolio, when they invested and these kind of things, and we rank these investors.
Yeah, this is just showing the top 25, but this is analysis of 30,000 funds that you can dive into all of them, and then it will tell you kind of what percentile of performer each fund is, and you can click on them to see all of the companies that count towards those outcomes. So all portfolio companies.
Of course, Index got quite some money back from WIDS of realized outcome, but they do have, quite some good companies in their portfolio that are also gonna exit soon. And you can see, when they invested in all of these companies. So of course, investing into a company at seed that then becomes very big, it's quite different than investing in them at Series B+. And yeah, you can explore all of this in the app.
Nice. We've got questions which are, I'm aware that we're running out of time as well, so we'll try and answer a few of them. But does the platform cover niches like disability tech, assistive tech? And there was another question as well about emerging memory. I think yes.
I do think we have something even curated, yes, on disability tech. So we do, this is when it's like a tag, it means, our team plus, AI and so on, work to like have something, very also curated on this. So this goes from wheelchair, but also, to rehabilitation and things for amputees, and also stuff like helping to interact with online content for people that maybe have problem of vision, and all of those kind of stuff inserted in here. You can also, of course, use semantic, so like you can just say, okay, I just want surprise me, with some startup around disability tech, and that also works in case we hadn't been curating this niche, of course. But in this case, we have.
Nice. A few people saying thank you for the presentation, so thank you very much for coming. I did also see a question in the Q&A, which was somebody asking about pricing. So we don't normally actually just proactively post this during these sessions, but I will share a link to the pricing page. And also, if anybody would like a demo of the platform separately, then yeah, feel free to get in touch. We'd be very happy to talk to you, of course. But yeah, I think we can maybe wrap it up there, because I don't want to run over time. So thank you very much, everybody, for joining. We have got another couple of webinars coming up, one next week, which is on building ecosystems. And then we're also going to have a couple coming, one on AI talent and one on deep tech as well. So look out for those. And we'll follow up with the slides after the session as well. Thanks very much for joining, and see you soon.